So tomorrow at 10 a.m. Eastern time is the Jackson Hole meeting. What's going on, guys? It's Ricky with Tactical Solutions here with a super quick update on everything that you need to know before the meeting takes place. With that being said, let's go ahead and jump right into it. Very quickly, just so you guys could see, following up with my hood short, I think originally when I showed you my position, I was down about $700 to almost $1,000. I closed the day $1,600 in the green, closed out my trade and left myself with my one lucky share. Like I expected, as it became overbought, it began to retrace. It found a support. I played it safe. I took profits, and then it ended up recovering. So it was not a home run of a trade, but again, nothing wrong with ending the day on the green. And just like we also said, markets were kind of struggling to choose a direction. They weren't really bullish. They weren't really bearish. They were kind of just trading sideways, which was kind of expected leading up to the market de-risking prior to this Jackson Hole meeting tomorrow, and then kind of just finding and settling at a support until we actually hear what Jerome Powell has to say. Now, why is tomorrow such an important day? Well, the first thing that you need to know is, yes, I will be live streaming this Jackson Hole meeting for free on my YouTube channel. I'm even thinking about going live for our live trading session and just making it free for everyone. So I normally trade live at market open exclusively and privately with my LPP team. But because this meeting takes place at 10 a.m. Eastern time, that's 30 minutes after the market opens. My live trading sessions are normally at least 1 hour. So that will kind of overlap, and I want to make sure that I capture it for all of you guys. So you guys let me know down in the comment section. Do you want me to go live? Do you want me to go live early, right at market open, so you can watch me trade for a little bit? And then when this meeting starts 30 minutes after the market opens, we can hear what Jerome Powell has to say. But for those that do not know, this is a yearly meeting the meat of this event consists of a series of papers of important economic ideas related to the year's topic. This year, it's the labor market in transition, demographics, productivity, and macroeconomic policies. Why is it that we all really care? It's because of this right here. So to my understanding, this whole thing isn't broadcasted other than his actual speech. It's a bunch of people that have to get invited, and based off of what they listen, they actually end up sharing. Fed Chair Jerome Powell will speak first thing Friday morning at 8 a.m. local time, 10 a.m. Eastern time. So again, 30 minutes after the stock market opens. With that being said, what are we looking out for? Remember, this is the issue with the market. The market always gets ahead of itself. Do you guys remember the headlines? And I made this very clear when I made videos a few weeks ago as well. Everyone was talking about the Fed is going to cut rates in September. The Fed has to cut rates in September. And there was a 99% probability that the Federal Reserve was going to cut rates. And it was even at one point that instead of pausing, there was actually a probability that the Federal Reserve was going to cut interest rates by 50 basis points instead of just 25 basis points. Now it's shifted. Now it's gone from 99% to 71%. And now there's a 28% probability that the Federal Reserve is going to pause. And again, we're still 3.5 weeks away, almost 4 weeks away. This is the one thing that I've made very clear, is that everyone likes to assume and get ahead of itself. And then this is why markets correct, because markets always get ahead of themselves. And then when things do not begin to play out as markets expected, they begin to de-risk and markets begin to fall. Do you remember everyone on social media was talking about the Fed is going to cut rates? This is going to send crypto to new highs. This is why I hate crypto accounts. All they ever do is to try to push the narrative that their shit meme coin is going to go to new all-time highs. Now they're shifting their titles. Fed officials say, no, with data now, wouldn't see it the case for a September rate cut. This is bearish. But just a week ago, it was incredibly bullish, right? And it's all of them, just in. Watcher Guru is not necessarily crypto related, but again, very attractive headlines where back then it was about 99% probability. Now it's 57%. When we look at this, Block News, just in, Fed officials say that there's no case for rate cuts in September according to the current data. So why do we care? Why do we care if they're going to cut rates or not? Why do we care about tomorrow? What do we care about? Very simple. And I want to make it as easy for you to understand. Tomorrow, when we listen to Jerome Powell, I want to say it's really three options. The first thing is, we're really looking for Jerome Powell's clarity based off of recent economic data the thing or the data report that would support a rate cut is the labor market. When the non-farm payrolls came out, they came out much lower than what was expected. It was uncertain. It showed that, wow, the labor market really isn't doing good. Non-farm payroll initial claims came out today as well, also came in a little bit higher than what was expected, supporting the case that, yes, the labor market's not doing as well as we originally wanted. And remember, the Federal Reserve, their focus is price stability and obviously maximum employment. So it's definitely a concern. And yes, when you see uncertainty with the labor market, that does or can support a rate cut. That is true. But if you paid attention to the Fed minutes that were released yesterday, it was very clear, right? If you guys did not see, Fed minutes were shared yesterday, and it stated, while a majority of participants judged that the upside risk of inflation, let me double check. Okay. So it says participants generally pointed to the risk of both sides of the committee's dual mandate, emphasizing upside risk to inflation and downside risk to employment, because that's kind of the pickle that the Federal Reserve is in right now. Right now we have the labor market is beginning to slow down. And hopefully the idea is that if they cut interest rates, they make it less expensive for people like you and I and for businesses to borrow money. Maybe by cutting that expense down, it can boost our economy and therefore boost the labor market. But the concern is also the upside risk of inflation. If you also saw last week, the CPI and the PPI was released. The CPI, which is the Consumer Price Index report, came in as expected. PPI came in red hot, much higher than what was expected. It came back to 2022 levels. This was a huge red flag. That does not support a rate cut. So the two variables, two factors, this is like the pickle that the Federal Reserve is in right now. This is what I want you to understand. What supports a rate cut? The labor market. The labor market is slowing down. That supports a rate cut. What doesn't support a rate cut? The inflation rate. Inflation on the PPI side of things, right? The producer side of things is going up. The thing that I believe, this is the third option, the thing that I believe will be expressed, because Jerome Powell never likes to get ahead of himself and he often doesn't like to say too much. I would not be surprised if Jerome Powell doesn't really provide much clarity in that and simply states that they are still 3.5 weeks away. There's still a whole nother CPI and PPI report that is set to get released before they even have to decide if they're going to cut rates or pause once again. They've always been data dependent. They've been eager to wait for the data to support a more clear way of decision making. And I believe that's what Jerome Powell will express. Again, my opinion is just that, my opinion. Who cares? But if you are bullish, what you are hoping for, if you want markets to go up, you want Jerome Powell to say, yes, the labor market is a concern. And although we are concerned about our inflation, we care enough about the labor market, we're just going to cut rates in September. I don't really think that they'll say that based off of what they said here. So it said, while a majority of participants judge that the upside risk of inflation is greater than of those inflation as the greater of those two risks, meaning that inflation is a greater concern than unemployment. And because of that, inflation at this current rate does not support a rate cut. So if you want markets to drop because you either are looking to buy, stocks at a cheaper price or you're shorting the market, then you want Jerome Powell to simply highlight his concern about inflation, that inflation is high. If they begin to cut rates, it can cause inflation to creep up quicker because it's inflationary. When you cut rates and inflation is already rising, it's only going to exacerbate the current problem. So if you want the markets to drop, you want them to really talk about how high inflation is, and that is their biggest concern. If you really want the markets to rise, you want them to focus on the labor market, and because it's slow, and that supports a rate cut. Or realistically, what I think is going to happen is that he's not really going to provide much clarity on either side, because if you've ever paid attention to him, he's a man of few words. He's the opposite of what Trump is. He doesn't like to speak about things that don't go beyond his work. He's not petty. He's he sticks to his job. And regardless if you like him or not, he's been very consistent with everything it is that he's done. He's been data dependent. And in my opinion, based off of the current data, we will have to wait to see for the next CPI report, because PPI, as it increased last inflation report, if PPI tends to be a forecast of what is going to get passed down to the consumer, if we begin to see that consumer price index comes in higher than what is expected, in that case, by the next time that the Federal Reserve actually meets, I do not think that there will be any question that they have no position to cut rates, because inflation is rising. And like they've stated before, inflation is a greater concern than the labor market. But if it shows that it's still not rising and then PPI comes in as expected or lower than what is expected, then again, they have no reason to not want to cut, especially with no more concern for the inflation aspect and more of a concern of, hey, labor market is still struggling. Let's boost it up. Let's start cutting rates. That is what would make sense based off of the data. Now, again, I'm not here to convince you that you need to agree with me. I'm just here to share with you based off of my interpretation of Jerome Powell's tone and how he likes to make decisions and how he tends to speak. I try to the best of my ability, listen to this guy every time that he talks. I don't just read articles or listen to other people's opinion. I actually hear what the dude has to say. And regardless if you like him or not, he has been very consistent. He has been waiting for data to support a rate cut. The only reason, and he's made this very clear, that he hasn't already cut rates is because Trump announced aggressive tariffs. Tariffs tend to be inflationary. So they wanted to give these tariffs time to see if they reflect in our inflation reports. But with all these pauses that he was implementing, it became difficult to understand if they were impacting our markets or not, or our people. So now in the next few weeks, we should have a better understanding if the impacts of these tariffs are affecting both producers and consumers. Again, I really hope I did a decent job making you aware of what to expect for tomorrow. Very simple. If you want prices to go up tomorrow, you want Jerome Powell to be for cutting rates. And you want him to really talk about the uncertainty of the labor market and not really talk about the concern of the inflation rate. If you want markets to drop tomorrow, then you want him to really hone on inflation is high. That is our main priority and our main concern. We don't really care much about the labor market. It's inflation. And again, most likely it's going to be pretty neutral, in my opinion. So very excited to share this with you guys. And again, all I literally ask you to do is get this video to over 1,000 likes. I just want to make sure enough of you guys show up, and I'll go live tomorrow for free. And again, we can watch it together as the markets react. I appreciate your time. Hope they're in a thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take care, team.